because if you're frightened of your debasement of your currency, or you're frightened of your economic or political stability of your country, you could have an internationally based instrument called Bitcoin that will overcome those local fears.
That's Larry Fink, the CEO of BlackRock, the firm that manages over a staggering $13 trillion in assets. For years, he called Bitcoin a tool for criminals, a worthless fringe experiment. Today, his company is leading the charge, bringing Bitcoin to the world's biggest investors. This is the inside story of how the most powerful man in finance went from Bitcoin's biggest hater to its biggest believer, a move that's shaking up finance as we know it. He didn't just change his mind, he unleashed a tsunami of institutional cash that's fundamentally changing the game for money itself. This isn't just a story about Bitcoin. It's a story about power, fear, and the future of the entire global financial system. And it all starts with one man's complete 180. To really grasp how massive this reversal is, you first have to understand who Larry Fink is. He isn't just another Wall Street CEO. He is, for all intents and purposes, the king of capital. His firm, BlackRock, is the world's largest asset manager. Let's put that into perspective. $13 trillion is a number so big, it's hard to even wrap your head around. It's more than the annual GDP of every country on Earth, except for the United States and China. BlackRock isn't just a player in the global economy. It's a force of gravity that shapes it. They manage retirement funds for teachers, firefighters, and pilots. They advise central banks. Their software platform, Aladdin, is the central nervous system for a huge chunk of the world's investment portfolios. So when Larry Fink talks, it's not just an opinion. It's practically a command that echoes from Wall Street to Washington. Now let's rewind the clock to 2017. The world was gripped by cryptomania. The price of Bitcoin was skyrocketing, and a frenzy of initial coin offerings, or ICOs, promised to revolutionize everything. To outsiders, it looked like a digital gold rush. But to the gatekeepers of traditional finance, it looked like a chaotic, unregulated casino. And leading the charge of that skepticism was Larry Fink. In October 2017, at a conference, Fink dropped the now infamous line that would define his view of Bitcoin for years. He didn't just dismiss it, he condemned it. He called Bitcoin an index of money laundering. Think about what that means for a second. An index measures something. Fink wasn't just saying Bitcoin could be used for crime, he was saying its main purpose, its very essence, was a measuring stick for global crime. In his eyes, Bitcoin's price didn't reflect innovation. It reflected the demand for anonymous, untraceable cash. It was a brutal takedown, a declaration from the top of the financial world that this new tech wasn't just illegitimate, but morally corrupt. His view was crystal clear. Bitcoin was for criminals and speculators, a digital back alley worlds away from the clean towers of legitimate finance. And he wasn't alone. This was Wall Street's wall of institutional money talking. For decades, the financial system was built on trust, regulation, and middlemen. Banks and asset managers were the gatekeepers. They decided what a real asset was. Bitcoin was an insult to everything they stood for. First, it had no intrinsic value in their eyes. A stock is a piece of a company. A bond is a loan that pays you back. Real estate generates rent. Bitcoin did none of that. It was, in their view, just a bet that some greater fool would buy it from you for a higher price later. Second, it was ridiculously volatile. How could a pension fund responsible for millions of people's life savings invest in something that could drop 20% in a day? The risk was just off the charts. Third, the rules were a mess. Governments were either hostile or totally confused. For a firm like BlackRock, which is built on following the rules, Bitcoin was radioactive. And maybe deepest of all, Bitcoin was an existential threat. Its whole philosophy is decentralization, a world without financial middlemen, a world that might not need firms like BlackRock. By its very design, it was a rebel. So Fink built the wall, and his words were the bricks. For years, this was how things were. Traditional finance on one side and crypto on the other, a fringe movement for tech utopians and outlaws. The trillions of dollars in institutional portfolios would never touch it. That was the consensus. That was the law, written by its most powerful king. For years, that wall stood firm. Fink and the rest of the financial establishment watched crypto with a mix of disgust and morbid curiosity. But then things started to shift. Not all at once, but slowly, cracks started to appear. This wasn't a single event, but a combination of powerful forces that even the king of capital couldn't ignore. The first crack came from a surprising place: BlackRock's own clients. Fink's job, at its core, is to serve the world's biggest investors: pension funds, sovereign wealth funds, and giant insurance companies. And these clients, the very people he was supposedly protecting from crypto, started asking about it. It began as a trickle, a few questions here and there, but that trickle grew into a steady stream. These weren't the get-rich-quick speculators from 2017. These were serious investors managing huge pools of money, and they were starting to see Bitcoin not as a toy, but as a potential solution to a huge problem. That problem was the second, much bigger crack: the global economy. In 2020, the COVID-19 pandemic turned the world upside down. In response, governments and central banks everywhere did something they'd never done before. They fired up the money printers and flooded the system with trillions of dollars. This saved the economy from total collapse, but it came with a terrifying side effect: inflation and the debasement of currency. When a government prints more money, every dollar, euro, or yen you've saved becomes worth a little less. Suddenly, everyone was scrambling to find assets that couldn't be printed, a safe place to hide from the coming inflationary storm. This is when the story around Bitcoin started to change. Legendary investor Paul Tudor Jones announced he was buying Bitcoin, calling it the fastest horse in the race against inflation. He compared it to buying gold in the 1970s. This was a huge deal. It gave other institutions the intellectual cover they needed to start looking at Bitcoin not as a tool for criminals, but as digital gold. And Larry Fink was watching. He was listening. The hardline skepticism of 2017 began to melt away. In late 2020, he admitted that Bitcoin had caught the attention of many and could become a global asset. The tone was changing. The wall wasn't so solid anymore. This led to the third and most important part of the awakening: Fink's personal deep dive. As he'd later admit, he started studying, he started learning. This is a key part of the story because it wasn't just about chasing a trend or pleasing clients. By his own account, he was having an intellectual evolution. He was challenging his own beliefs. He even talked about it, saying, "I was a skeptic. I was a proud skeptic." He then explained that after studying it, he realized his old opinion was wrong. A public admission of being wrong from one of the most powerful men on the planet, that was shocking in itself. It was a signal that this wasn't just a small strategy shift. It was a fundamental change of heart. So what did he learn? He started to see the digital gold idea on a much deeper level. Bitcoin, like gold, has a fixed supply. There will only ever be 21 million Bitcoin. No central bank can just print more. It's decentralized, not controlled by any single government or company. It's an asset you can hold yourself without a bank. In a world drowning in debt and scared of political instability, those features started to look really, really good. He even started using the term digital gold himself. But Larry Fink isn't just an intellectual, he's a brilliant businessman. As he studied Bitcoin and listened to his clients, his business brain went into overdrive. He saw more than just a new asset, he saw the biggest business opportunity in a generation. The problem was obvious. His institutional clients wanted to invest in Bitcoin, but they couldn't or wouldn't do it directly. It was too complicated, custody was a headache, and the regulations were still murky. They needed a bridge. A simple, regulated, familiar way to put a slice of their massive portfolios into this new digital asset. And Fink knew exactly what that bridge should be: a spot Bitcoin ETF. An ETF, or exchange traded fund, is basically a wrapper. It's a stock that trades on an exchange just like Apple or Microsoft, but it holds an underlying asset like gold or oil. For big investors, they are the gold standard of simplicity and access. A spot Bitcoin ETF would be the ultimate bridge. It would let anyone from a multi-trillion-dollar pension fund to a regular person with a trading account get exposure to Bitcoin's price without worrying about private keys or crypto exchanges. They could buy and sell it through their normal broker, wrapped in the safety of a product managed by a trusted name like BlackRock. Fink realized that if BlackRock built this bridge, the tolls they could collect would be massive. They wouldn't just be part of the crypto revolution, they'd be orchestrating its grand entrance into the mainstream. They would become the main gateway for all those trillions of institutional dollars waiting on the sidelines. The awakening was complete. The skeptic hadn't just seen the light, he'd drawn up the blueprints to build a cathedral in its name. The wall he once defended was about to come crashing down, and he was going to be the one holding the battering ram. The plan was set. The intellectual and business case was solid. What came next was an act of financial shock and awe. On June 15, 2023, BlackRock officially filed an application with the SEC for a spot Bitcoin ETF to be called the iShares Bitcoin Trust. Ticker symbol IBIT. To most people, this was just another piece of financial paperwork. But in the worlds of crypto and finance, it was a nuclear bomb. For years, company after company had tried and failed to get a spot Bitcoin ETF approved. The Winklevoss twins, Grayscale, VanEck, the SEC's rejection list was long and consistent. The regulator was worried about market manipulation and protecting investors. But a BlackRock filing was different. BlackRock doesn't lose. At the time they filed, their track record for getting ETFs approved by the SEC was a mind-blowing 575 to 1. They don't file applications they don't expect to win. They do their homework and meet with regulators for months behind the scenes. Their legal teams are the best in the business. The message was clear. This wasn't a long shot. This was a declaration. BlackRock knew they had cracked the code, and the market reacted instantly. The price of Bitcoin surged on the news alone. The filing kicked off a mad dash. Other big financial firms that had been watching nervously now rushed to file their own applications. Fidelity, Invesco, Franklin Templeton. Suddenly, the SEC was buried in paperwork from the biggest names on Wall Street. The pressure was on. Denying all of them was one thing, but saying no to BlackRock with its near-perfect record and immense power was a whole different story. Finally, after months of waiting and intense speculation, the dam broke. On January 10th, 2024, the SEC approved a whole batch of spot Bitcoin ETFs. The very next day, they started trading, and the result was nothing short of historic. BlackRock's IBIT didn't just launch, it erupted. It became one of the most successful ETF launches in history. The numbers are just staggering. IBIT became the fastest growing ETF ever. It blew past $100 billion in assets under management in a fraction of the time it took previous record holders. For context, some of BlackRock's other wildly successful funds took years to hit milestones that IBIT was smashing in months. It wasn't a flood of capital, it was a deluge. This wasn't just existing crypto money moving around. This was new money, institutional money, the wall of money that Fink had once guarded so fiercely, now pouring through the gates he had just unlocked. The success was so huge that IBIT quickly grew larger than BlackRock's own long-established gold ETF. Not only that, IBIT became the second largest holder of Bitcoin in the world. In a way, digital gold was now bigger than the original. With the floodgates open, Fink's transformation was complete. He was no longer a skeptic or even just a believer. He became a crusader, an evangelist for Bitcoin's place in a modern portfolio, and he gave it a new, powerful name. He started calling Bitcoin an asset of fear. Speaking at conferences and on TV, he laid out his new belief. He argued people weren't buying Bitcoin out of greed, but out of irrational and justifiable fear of government debt, fear of inflation, and fear of global instability. In a world where governments were printing money and piling on debt, Bitcoin wasn't a reckless gamble. It was a flight to quality. It was a lifeboat in a sea of fiscal irresponsibility. He explicitly compared it to gold's historical role, but with a digital age upgrade. It's no different than what gold represented over thousands of years, he explained. It is an asset class that protects you. He then added a crucial point. And unlike gold, where we manufacture new gold, we're almost at the ceiling of the amount of Bitcoin that can be created. This was the ultimate validation. The man controlling more capital than anyone on earth was not only selling a Bitcoin product, but was explaining Bitcoin's core value better than many of its earliest supporters. He was telling the world, and more importantly, his clients, that owning Bitcoin wasn't reckless. It was a smart, defensive financial strategy. He had provided the product, the story, and the institutional seal of approval. He made Bitcoin legitimate for the entire global financial system. The rebel asset had finally been welcomed into the kingdom, escorted through the front gate by the king himself. Now that BlackRock has opened the floodgates, what do you think is next for Bitcoin's price? The surge in 2024 took it to record highs, with some analysts saying the influx of institutional money has only just begun. Is a price of $200,000 or even higher inevitable? Let me know your predictions in the comments below. If you think this story ends with Bitcoin, you haven't been listening to Larry Fink. The launch of the IBIT ETF, as huge as it was, isn't the final chapter. In fact, according to Fink, it's just step one. Bitcoin was the proof of concept. It was the battering ram that broke down the wall between old finance and the new world of digital assets. But Fink's ultimate vision is way bigger, far more ambitious, and could reshape the very plumbing of the financial system. His true endgame is the tokenization of everything. In his public statements, Fink is hammering this point home. We believe this is just the beginning, he stated. Step 2 is going to be the tokenization of every financial asset. What does that even mean? Tokenization is just creating a digital version, a token of a real-world asset on a blockchain. Think about a share of stock, a bond, the deed to a house, or a piece of fine art. Today, owning these things is recorded in slow, old-school databases. Selling them can take days and involves a bunch of expensive middlemen. Fink's vision is a future where every single one of these assets is tokenized. Your share of Apple stock won't be an entry in some broker's database. It'll be a unique digital token you hold. Selling it won't take 2 days to settle. It will happen almost instantly, 24/7, on a blockchain. The implications are revolutionary. Tokenization promises to make markets that are currently slow and murky incredibly efficient and transparent. It could allow for fractional ownership, letting smaller investors buy a tiny piece of a skyscraper or a multi-million-dollar painting. It could create a single global ledger for all financial assets, breaking down the walls between different markets and countries. Fink is so sure this is the future that he's already positioning BlackRock to lead it. They launched one of the first tokenized money market funds called BUIDL on the Ethereum network. He believes the technology behind Bitcoin, the blockchain, is the real revolution. The ETFs are just the first bridge. The next step is to move all the assets themselves across that bridge. This is the final piece of the puzzle. Larry Fink's 180 on Bitcoin wasn't just about a single new asset. It was about seeing that the technology had fundamentally changed. He saw that blockchain was about to finance what the internet did to information. He didn't want to be the record store owner watching Napster emerge. He wanted to build Spotify. By embracing Bitcoin, he was ensuring BlackRock would be at the center of this new tokenized world, not a victim of it. Bitcoin was the Trojan horse that let him bring the revolutionary power of the blockchain inside the city walls of traditional finance. The journey of Larry Fink is more than just one man changing his mind. It's the perfect story of the collision between the old world of finance and the new. He started as the ultimate symbol of the establishment, dismissing Bitcoin as a tool for outlaws. He built the wall that kept institutional money out, but then, faced with undeniable client demand, a changing world, and the sheer scale of the opportunity, he didn't just knock the wall down, he dynamited it. He orchestrated one of the most successful product launches in the history of his industry, and in doing so, gave Bitcoin the ultimate institutional seal of approval. From index of money laundering to digital gold and an asset of fear, his evolution in language charts the course of Bitcoin's own journey from the fringe to the very center of the financial universe. Now, he stands as its most powerful crusader, not just for Bitcoin, but for the underlying technology he believes will remake the world. With the most powerful man in finance leading the charge, is the tokenization of all assets now inevitable? And what does that mean for the future of your money? If you want to stay ahead of these massive shifts in finance and crypto and understand what they mean for your portfolio, make sure you subscribe and hit that notification bell. This story is just getting started, and you won't want to miss what comes next.